Good afternoon. Um, how's everyone doing lately?
Even
I'm
got
doing very well, thank you.
That is great. Looking forward to meeting everyone at the next Tax Rep Network event in Orlando. I signed up for that. I went last year. Which is how I got introduced to Felicia. It was really great. So the agenda for our topics today, we're going to be going over, what happened during with the IRS, the government shutdown, which affected, of course, the IRS shutdown. Now that it's over, what that means. Number two, we're going to be talking about IRS liens, how they arise and how to deal with them. Then we're going to be talking about Letter 11, which I issued a special report on, and how serious that Letter 11 is. And then one of my topics will be talking about estates that have a lot of debt and tax issues. And then briefly about New York State offers and how that deals from IRS offer program. And finally, I'm going to turn the floor over to Patrick and Felicia, and you're going to talk about, something that I'm pretty excited to see is a book that you're authoring. So if everyone's
yes.
ready, let's get started,
Sounds
and
good.
let's talk about the IRS shutdown. Um, I actually was pretty challenging to do business during these last 6 weeks. I don't know what everyone else has experienced. But for me, what I noticed is revenue agents, revenue officers, offer agents, appeals officers, and any attorney working at the government, including Department of Justice, were furloughed. So any case that I was on that was either in front of the offer unit, appeals unit, tax court, there was no one to deal with. And there may have been deadlines to deal with, but there was no one to talk about that. I was able to engage the IRS in what's called the ACS, Automated Collection Service, which and accomplished results. I was able to deal with the lien unit to get lien payoffs, and of course, put in my power of attorneys. What's been your experience the last 5 weeks?
So I'll just take it from here. My experience has been it's kind of the same thing. It's been slow because people are, like as you said earlier, they kind of thought this is a vacation time, so they're really not moving. And those that we are working with, I mean, the ACS unit for me was not as friendly, I would say, and not as helpful as they normally are. When you're calling to get, a resolution package put in place, for an example, a CNC package or even an installment agreement. There was just a lot of hoops you had to walk through, and people were just not as eager to get things done as they usually are.
Yeah, I found the same. I mean, in the brief engagements with the ACS, they were not friendly. They were kind of upset that I was actually calling them.
I
Um,
actually had one ACS rep tell me that the whole concept was for they're discouraging people to call altogether. They
yeah,
just didn't want us to call at all. I don't know,
but
Patrick, what did you experience during that time?
Well, I didn't have as much communication with ACS. When I would call, it would take a little longer to get through. They were somewhat helpful, but it was more of a I need a transcript downloaded or something to that effect. What I did notice was that the powers of attorney were taking significantly longer to be processed, even if you filed them online, and that got frustrating to clients. They come in, they want to do account analysis, and they get the power of attorney, and I tell them it's going to take quite some time to get that process through because the IRS has just taken so long. They furloughed, 60, 70% of their staff. So it was a little frustrating on that end, but I also managed, you know, when you manage the relationship with the client and they understand, you said, well, if the government shut down and they kind of understand that and they wouldn't take it out on me because they understand that the government is doing what the government is doing. But I did notice it was difficult to get things through. And if you had something pending, it's just in essence tolls for 6 weeks the amount of time the IRS is looking at something, and it's going to take longer for them to get that through.
yeah,
there's that
Correct.
much longer.
I found exactly, Patrick and Felicia, I found the exact same for my cases. Now moving forward, the vacation is over for all of us. So starting on Wednesday, when I knew this was ending, I immediately send out emails and calls and text messages to any client that actually was engaged with a current offer, where the offer agent requested information, or was dealing with a revenue officer, including a case I'm working on with Felicia, and they've requested information and opposed deadlines, which were never formally extended, that the client should have it to me by this week, the end of this week, which would be today. Unfortunately, for most of my clients, they did not provide still the documents that the IRS requested. So after, the agent will rematerialize, it's going to be challenging for everyone.
Yeah, I had one case where it was we had a client and we're filing back tax returns. It was actually with an appeals officer, and the appeals officer is accepting the returns, but it was but we filed the 1253, to preserve the right for tax court, and so the U.S. attorney was working with me and saying, hey, we're going to just we accept that the auditor is going to accept these returns. We're in essence going to dismiss the case and kind of let it go, but he was furloughed in the middle of the process, so it had to be turned over to somebody else, and we were under a shortened deadline to get something to. I actually had to drive an hour and a half out to my client to get him to sign this form, to get it to the court, to the attorney, at the time, on time. So it was one of those things where you had to, I couldn't do an electronic signature or anything like that, and I had a day to get it done, and because of the shutdown, it just made things a lot harder and threw a wrench in a lot of things.
Yeah, it has been. Um,
I have a CNC case right now that's pending at the IRS, and the day that I called, it was like pulling teeth to get them to hear me, number one, and then to accept documentation. I literally had to hang up and call back because the young lady that I was speaking with was like, "Oh no, you have to fax it all in." I'm like, "This is going to take forever," and didn't offer an upload tool, didn't offer anything. So I did call back and was able to talk to somebody else. But again, I take and it takes manager approval, but I was not offered that at that point. I was offered, we're going to get it to the manager and then we will send the client a letter. And as of today, there's still no letter. There's still nothing for that case. So we've still got cases that are there that are still pending.
yep, we all do. The only one for me that I'd say is crucial. I mean, everything is crucial. I mean, I have offer cases with deadlines for IRS offer agents or collection agencies that are in the field. But probably my biggest upcoming deadline will be a client that received a 90-day notice, and I immediately went on 3 months ago when I was engaged and gave him a comprehensive due diligence package from the IRS, including like years he owed and wage and income. I told him first thing is to hire a new accountant, prepare amended returns for these years, and maybe I could deal with the IRS on settling this audit before you have to go to tax court. Well, I've been reminding him and pinging him pretty much 3 times a week for the last 3 months. I'm going to be sending it to the accountant. I'm hiring an accountant. I'm doing it, Mr. Kass. Still nothing today. I'm a week away from the end of the 90-day notice. And you know what that means? I have to file the tax court, and he's going to have to pay a lot more money for something that could have been settled 3 months ago.
Yep.
So let's move on to another topic. Let's talk about IRS liens.
Okay.
A very fun topic. How they arise and how to deal with them. So, Patrick, why don't you talk about liens? Why does the IRS put liens on originally, and what could you do to stop them?
Sure. The idea of a lien that the IRS would put on for tax is to protect the government's interest from if money's owed to the government. So a lien, if they file an actual notice of federal tax lien, it attaches to property, doesn't attach to the person, attaches to the property. And what it does is protects the government's interest. If that property is sold, then the money paid for the purchase of the property will be distributed to the lien holders in the order in which they appear until the money runs out. And then the title could pass cleanly. But it allows the government to protect their interests. So I'm not taking my house, I'm not selling it and taking my 100,000 in profit and running off with it, without having to pay the government. That's with an actual notice of federal tax lien. Now, a silent lien arises when the tax is assessed. If it isn't paid, a silent lien will arise. The money is still owed to the IRS, but a notice of federal tax lien hasn't been filed with the county recorder, so there's nothing in that sense there. But just because it's been assessed and an NFTL hasn't been filed doesn't mean that a lien doesn't exist.
Now the lien, yeah, that's very interesting. A lot of people don't understand the concept of a silent lien, which, like you mentioned, the IRS automatically has the lien, but then they go and file what's called the notice of tax lien,
Yep.
which they're now letting everyone know, including property owners. And so it automatically, they don't even, I used to have clients say, well, does this lien automatically attach to this property? Let's say I have 5 properties and some of it is in an LLC, some of it is in just my name. A notice for tax lien attaches automatically to everything. They don't have to file it in the county where your property is.
Right.
It's different from a normal lien or judgment that actually does have to be filed and attached to property.
Exactly right. And then
Like it gives the government
process
public
kind
claim.
What's that? I didn't hear what you said, Felicia.
I said it gives the government public claim and priority over creditor,
Yes.
over other creditors. So when we say that, we want to make sure that people understand that if you have a federal tax lien and it's on your home and you're trying to sell your home or rent a property, anything that has a mortgage, the general concept of if it's a lien, if there is a lien against it and it's secured by the property, they have first rights to the money. And then the rest of the money gets paid to the IRS.
Right.
Sure. And what you do is if you have a property, the way to deal with it sometimes people think, and I've had clients say this to me, that if a lien exists, that they can't sell the property. And that isn't true. What it means is once the property is sold, the lien holders are paid for any extra money that's been distributed to the owner. But if you have a home, for example, because there's a difference between asking the IRS to subordinate a lien if you want to refinance, or discharge property from a lien if you want to sell the property, to allow the IRS to let those properties go. And then there are certain forms you can follow to do a lien subordination or a lien discharge, depending on that. And those need to be filed with the IRS to get the certificate of discharge or the certificate of subordination. The idea is if I'm going to refinance my house, a bank won't lend me money if the bank isn't going to be guaranteed to get their money back first.
Number one position.
Exactly. So when I subordinate the lien, I ask the IRS to take a position behind the bank, and if they do, then it can be refinanced and money is then left given to the government.
This is very interesting. Back in the day when I had an active bankruptcy practice, I used to have a lot of tax-driven corporate and personal bankruptcies. And by doing those, you'd get settlements with the government. And then the court, you would get you'd file what's called a plan disclosure statement showing how you're paying everyone. And the IRS would sign off on it and the court would approve it. And this would be all public record. So let's say I settled an IRS claim for $2 million and I settled it for $150,000, just using round numbers. That's great. You settled the $2 million claim for $150,000. And then you have either a payment plan to pay that. Client has a property X, primary residence. Client, and this is based on an actual case. Client wanted to sell the property. I actually went over to the IRS payoff and they said, hey, we have approved plan. here's a plan disclosure statement, here's your IRS sign off. They go, Mr. Kass, we don't care about that. You have to go through our lien, payoff unit, and we want right now a current appraisal, contract of sale, if you're selling it, and and a HUD statement showing proceeds. And I go, whoops, the property is now worth double what it was in the bankruptcy.
Yep.
So we want what the proceeds are per the HUD statement. Doesn't matter that you have a firm settlement. That was a
Right.
haggle. Eventually, I was able to get it close to the original settlement, but that's the difference. So once the lien is on there, even if you have subsequent settlements, you're now going to be dealing with the lien unit. Totally different animal.
Yeah,
And like
absolutely.
you mentioned, there's
The
the
other side of that is
quotations.
a lot of,
Yeah,
I was going to say the other side of that is a lot of taxpayers don't understand that the lien is put on intentionally to it, because they didn't either, even if they have an installment agreement or some kind of, instrument in place that says we've resolved our debt by this, installment agreement. The lien is still there and it's still active. And I've seen it just even as of today, where taxpayers will say, well, can we remove the lien so that we can sell the property, because they don't want to be embarrassed by the lien? And the answer to that truly is no. The IRS is not going to release that lien until you have the ability to show proof of payment.
correct.
Exactly. Exactly. And
So
I
one
know
one
it's
more
embarrassing,
yeah,
but it is what it is. And unfortunately, it just, there's no way around.
one more quick point is, and I have a case that's currently dealing with this, is when you have a federal tax lien and you have competing state tax warrants. Which liens take priority? In Indiana, a tax lien is called a tax warrant, and it's kind of the first in time, first in right theory. And the lien date for a federal lien is the date of assessment of tax, not the date the notice of federal tax lien was filed. So it depends on when the tax was assessed and when the tax warrant was issued by the state. Those are the dates that show if there's a competing issue on those, because the IRS is saying we want all the proceeds. Well, the state's saying, well, we get some of the proceeds and they're in a higher position. That's the fight I'm having with the IRS right now. But that's another issue to have if you have competing state liens.
yeah, I've done that too. And I agree. In New York State, the IRS has the same position that they go with the date of assessment is key. So their date of assessment versus New York State's warrant. And again, New York State also has the term warrant similar to your state for their lien. Yeah. And the interesting thing is, Jay, a lot of taxpayers say, "Hey, Steve, I got a warrant. Does that mean they're going to arrest me?" So
Yes.
that terminology again, a warrant for a state is a lien. They're not arresting you, but yeah, it's equivalent to the IRS lien. And you're right. I mean, when you're dealing with the order of priorities, then you got to pull the title search. You got to look at the date each one was found, and then you got to look at the IRS assessment date
Yes.
specifically. I've had one. I don't do many of these, but back in the day, I did successfully stop a lien from being filed when I got the notice of tax lien. I filed a collection protest on it. It was a taxpayer that was employed in Wall Street, and he provided me documentation from his employer. He was making a lot of money, over $1 million. And documentation was that if he gets a federal tax lien, he loses his employment out of a job. So I went over that with the appeals officer, went through in detail the rule for securities industry, and they granted my appeal and did not put the lien on.
That's
Well, it
awesome.
doesn't benefit. It
Yeah,
doesn't benefit the government, because if you lose the
yeah,
job, then I have no ability to pay.
Right.
right.
So
It kind of makes sense. You say, okay, they can have a lien on no assets, which a taxpayer didn't have, and now you force them into the unemployment line. And and someone in the securities industry, if you can't work in the securities industry, that is their employment.
Right.
Yeah,
Exactly.
yeah. So you're gonna have a lien that attaches to nothing. or you're going to have a taxpayer that's going to be making $1 million a year, that in which case we were doing a full pay installment agreement, and they did get all the money at the end. So let's change the topic to letter 11. Why does the IRS file letter 11, what it means, and what could we do about it? Now, when you actually heard the term letter 11, and first I got involved in the business, you would think that, is pretty, harmless looking letter, so just, letter 11, What did they come up with the letter 11 terminology? Do you know?
I actually do not know where they came up with the terminology. No.
Yeah.
Unlike the notices, the letter 11 means I mean, I know what it means, but where they came up with the number and the terminology is it because the two ones look like L's? Maybe because it's, or, an I and an L. I don't know the answer to that, Stephen. What is
Yeah,
that?
it's just kind of interesting because a lot of taxpayers got this and didn't look kind of harmless until you actually understand it. Why does the IRS file this notice? First, to do that, they're going to go through a whole notice procedure. They're going to be going through the CP 501, 502, 504, another one of my famous notices called Notice of Intent to Levy, which means they intend to levy next, but they're not actually levying right now. And then, so you're going through notices saying, hey, you owe this money. Another letter, hey, friendly reminder, you owe this money. We're going to escalate collections. And then CP 504 saying, well, we now have the intent to levy. So, and then you get to letter 11.
And
Letter
it's
11
interesting
says,
that when the client gets that letter 11, that's the first time sometimes will even have any interaction with us at all.
right. I mean, hopefully they gave it to us before, but you're right. Letter 11, well, that's actually stating on its face, we will, not intent, we will be levying you within 30 days.
Yep.
And the other side of that is that what they don't understand too is it's not just levying the bank account, which is what they're basically talking about in concepts, but they're also going to send out, if they're contractual workers and they got 1099 income coming in, they could literally send that letter or that levy to the contractors and says, hey, look, any money you owe John Doe, we want, which could then put him out of business.
Correct. So my experience, I get one of these letter 11s, there are a lot of options which we could talk about. Immediately, well, first, I don't wait. The taxpayer sends it to me in the beginning. I'll file the appeal. Before I even engage the IRS in anything else, I'll just file the appeal. I want it in there. Of course, you're a day late, and the problem is with letter 11, as opposed to the other letters, there's no electronic response to that.
Mhm.
You look at it, the other letters, you could actually respond using their online service. Letter 11, the only response is you have to file your appeals form. You have to get the taxpayer to sign it. And then you actually have to run over or walk to your local post office and mail it, certified mail, return receipt requested.
And that's the 12153 you're talking about, right?
Yeah,
That's where
123.
yeah. So that's one of the first things I learned was it's almost professional malpractice if they get a letter 11 that you don't file a 12153. I mean, that's, now if they come to you 45 days after the issuance of the letter, you can still file it for an equivalency hearing, but you've lost the collection due process hearing rights to
Correct.
that. So it's important that they read these letters and bring it to you one time.
Yeah, and like I mentioned, I'll automatically file these. First thing I do as an attorney, I see that, I get it in. Then we discuss what's our ultimate game plan. Are we going to be doing an offer? Are we going to be doing an installment agreement?
Right.
Are we going to be doing a collection due process? So once I get it in and I know, hey, there's no gun to my head, then I will still, after it's filed, I will engage the IRS, ACS, or get the offer in, but at least there's no gun. taxpayer will not have the wages garnished, or they won't have their bank account seized, or
Right.
they won't have, even if they're 1099, they won't have these threatening letters go out to their clients.
Which can
Right.
also be quite embarrassing if you are 1099 and you're a contractor. So now all your contractors know that you have IRS issues, and that's really embarrassing in the concept of doing business, because they may now look that you may do great work, but they may look for somebody else that can also do the work because they don't want to deal with somebody that's got issues.
Right, which is why you appeal this letter. Before we explore options, get your appeal in, and then do they qualify for an offer? If that's if that's the plan, which I always will look for, that takes time. You want to get it in. Again, you have to prepare the forms. You have to give the IRS all the substantiating documents they need, and then same thing. There's no electronic filing for the offer. Snail mail.
Mm-hmm.
Return receipt requested. So, and then you got to get the IRS to receive it and process it.
Yep.
Sometimes they don't process it right away, or
Right.
they may come back to you and say, well, this offer is not acceptable for processing. Your client is self-employed. We want him to pay estimated taxes, get in compliance, and then you offer. So what I'm saying is that's why I filed the always, 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 always file the 12153 the day I get retained. And then get the offer in if that's the offer. If it's an installment agreement, engage the IRS. It could be a process, as we know. If they really qualify, maybe a CNC, but it's one of the three.
Yes. Yes,
That's actually
absolutely, and that's the key. And the other key is, for people who are listening to this, the importance of just reading the notices and not just leaving them unopened and sitting over here to the side. Because I'm sure that both of you have had clients who come in and they'll give you a letter 11, and it's past the deadline to file for the collection to process hearing, or they've already levied the account. They were too late. So it's important to get in here and talk to your professional in time to get that appeal filed on time.
Yes, and you brought up something very interesting. Again, if it's just an income tax levy against their wages, it's embarrassing, but that could be a one-time event.
Mm-hmm.
And if they take out 10%, okay. What about if they have 50,000 in the bank account and the account is not restrained?
Right.
They're going to take it all, and they come to us and say, Mr. Kass, the IRS just levied my bank account. I go, how much is in there? 50,000. Can you get the money back from the IRS? Now at that point, I only know one tool that works, which is what I used to do, bankruptcy. And since I don't do it, I'll refer to one of my, if it's in the state of New York, one of my bankruptcy counsels. I said, you want the money back? You have 21 days. You file one of the bankruptcy petitions.
Yeah,
Chapter
I
11.
think there's that misnomer that when they come to us, they think, oh, you can call the IRS and you can talk to somebody and you can have them stop that. And I've said many a time, not, I'm not able to do that. Once they've got their fingers into it, it's pretty much get in, grab and go. I
Right.
mean, the
And yeah,
banks are obligated to
correct.
do it on a certain
So
day.
that's why it's important to deal with this early. Appeal from the beginning, engage the IRS, because once they got this levy, and once again, if it attaches to your wages, okay, you get a garnishment for a week or two. Not the end of the world. But if you have a bank account and your money in your bank account, substantial monies, unfortunately, then only one option is going to be filing bankruptcy and very impacting their credit for something that could have been done without as much stress weeks ago.
Absolutely.
Stephen, it's the old concept and the old adage of you snooze, you lose. And so in the real world, they have snoozed up until this point, and now they're lost. They lose because they snoozed and they kept hitting the snooze button, right? The alarm's going off, the alarm's going off. They hit the snooze button until all of a sudden now the alarm quit going off and they've taken everything and now they've lost.
Correct. So again, in summary, letter 11, it may sound kind of, harmless. It's not. It's not harmless.
Absolutely.
Absolutely not.
And one quick point, and you mentioned this earlier, Stephen, when you talked about the IRS has to go through a process of notices before they get to letter 11. They just don't issue the letter 11 first off. I get a lot of clients coming in with a 504, the intent to levy, and they're afraid, oh, they're going to levy my accounts. And I tell them, no, we have time, but we need to act now so they don't get the letter 11 where they will issue that levy. So to let them know, don't wait till you get to that point where you now are really under the gun of the IRS taking your assets.
Right. Or you even get the
Don't hit
notices
the snooze alarm.
before. Remember the friendly note, quote unquote, the friendly notices. Hey, your money. Address it.
Right.
Right. Yeah.
Yeah.
Again, don't hit the snooze alarm. And that's what they're doing. And when every time they get a letter, they're not addressing, they're just hitting the snooze alarm. And then eventually the alarm's going to quit going off. And then it's kind of like a tornado effect. You hear the tornado sirens and nobody takes heed to it. And then all of a sudden when it crashes and it comes through, take heed to the alarms. And that's what those original letters are for. They're alarms.
Yes. Now let's move on to one of my topics, which is dealing with estates and that owe debts, both to the government and to other creditors. I've been lately seeing a lot of these. They've been coming to me through a number of different estate councils that I deal with. A company that, a decedent dies, he owned a company. Company had $3 million worth of debt. Various suppliers, various, maybe what's called in New York Article 3 claimants, which is suppliers that have supplied money to a work that you were engaged in, if you're a GC. And they also, of course, owe the IRS New York State. So what I've been dealing with these cases, the first thing I do is I put in my power of attorneys, both from the state and the federal. I'll order my due diligence package, both on the individual and the company. That'll show me, number one, how much does the company owe? How much does the person owe? Number two, what returns have not been filed, both personally and corporate. Number three, what sort of collection activities have gone on in the past, like liens, and for like wage and income information. So I'll take that due diligence package, I'll give it off to their accountant. They'll prepare, if the returns need to be prepared to get them in, compliance and good standing, they do that, because at the end of the day, there's going to be executor involved, and he's responsible for what's called administering this estate. Other cases that, they owe the IRS New York State, they owe a lot of subcontractors and suppliers. Now it's a matter of who gets what and how do you deal with it, and try to minimize the payments so the beneficiaries get some money. So at that point, I rely on my accounting team, which are pretty good. They, we work, I have a lot of outside accountants, like, I work with Felecia a lot. And this is half the job now is accounting, preparing Excel spreadsheet showing what are the debts on the corporate level. And then I look at that and say, okay, now these are corporate debts. How many of these have personal ramifications, like IRS and states usually always will for what's called trust funds. And then if they're claimants like Article 3A or corporate guarantees, then I put them in that bucket. So what I do then is I negotiate with the main creditors on the corporate level, try to get them a big discount. Kind of put them and say, creditor, I see this company has $3 million worth of debt. You have this claim. We're going to go forward and put the company in Chapter 11 with one of my attorneys. I'm going to show you the analysis, which I've done hundreds of these cases. You're going to get 10 cents to the dollar. We'll give you right now 20 cents to the dollar through this case to settle everything. 9 times out of 10, they will. Now you freed up all that money, so the personal level, they're not going to appear. And now maybe you can give the spouse or the kids a home that they can inherit or some other property. So the game here is number one, to do your due diligence. Order your packages from the IRS New York State, and then understand who your creditors are. Put them in different buckets, corporate and personal, and then first engage the corporate, try to settle that, and then you into the estate, and hopefully you freed up money that could be distributed to the beneficiaries.
That's
That
it.
act-
That's
yeah,
really good advice, Pat or Stephen. Sorry. And I say that because I know that when my parents both passed away in 2021, 8 days apart, everything went through probate and trying to navigate all of that and trying to figure out what everything was and all the creditors that were involved, hiring the attorney, all of that is so important to make sure that you have all of that. And I did what you had to do was as the trustee is I had to, or the executor, I had to go do a power of attorney and get all these documents to ensure first that everything was filed and they were current in their filings and then moving forward from there.
correct. And the thing is, the executor, which usually is the main beneficiary, not every case, but is their responsibility now is to marshal the estate correctly. So if they don't file the correct returns now with the government, as opposed to having an estate liability, they can have a personal liability. So that's what you order your due diligence package. See what's there. They necessarily don't have to pay estate debts personally, but you have to get the estate and personal in compliance. Again, the same thing that we do with any time we're dealing with government. They want to see you're in compliance.
That's right.
And then you could do your magic. If you're negotiating, you're negotiating. But it's getting everything done, getting returns filed, both corporate and personal, and then you could do your negotiations. I'm gonna just transition to one topic briefly before we turn the floor over to Patrick and Felecia. I'm going to talk briefly regarding New York State offers. I do a lot of these for both New York State, both corporate and personal income taxes, and also trust fund taxes. I mean, I'm not going to go into as much detail in this as I do in prior discussions because, for the most part, the rules are the same as IRS offers. They look at the assets, they look at liquidation of assets, they look to budget, they have the same budgetary tests and allowances for various expenses. So that is pretty much all the same, with the IRS in New York State. What difference is what I'm going to go into. The main difference, and you're not going to believe this, New York State will only give you one shot. What I mean by that is you file an offer and said offer is accepted. So let's say you get an offer to settle 100,000 for 10,000, and they'll put you on a 5-year plan to pay the 10,000. You default on that. You can't make those payments. Tax bill come back to me and say, Steve, I defaulted on that. Call up New York State, which I've done in prior cases. They've defaulted, Mr. Kass. They had an accepted offer. I go, okay, can I file another offer again? No. We have a rule, one offer.
One and done.
One. That doesn't mean if your offer is rejected, which means they never accepted it. In the beginning, you're haggling on the offer. You can then refile an offer because it was not accepted. So I tell clients, when you're doing this, make sure that anything you're proposing, you could do. Because you get one shot here. New York State doesn't want to have an accepted offer default and then look at another offer. So I'll get clients who recently, I've been seeing a lot of them. New York State has one of their pet peeves to collect, which is IRS will take your passport. New York State will take your driver's license if you owe more than 10,000. They'll suspend your driver's license, send it to the DMV. So clients will come to me and go, Steve, I owe the New York State $1 million for sales taxes. I had a prior settlement where I reduced everything to $15,000 or 50, whatever. I defaulted now. What can you do? I go, not much right now, because number one, you can't file an offer again. Number two, you can't go on an installment agreement because New York State doesn't have what's called a partial pay installment agreement like the IRS does. So you're not going to pay $1 million over 5 years. They have, at most, what's called a hardship to drive. So you have to fill in a hardship application that shows you don't have the ability to pay the $1 million. And then they will consider giving you your driver's license back. But it's not a settlement. So the operative word in doing New York State offers, if you propose something and and it's something that you have to be able to do, or the debt is going to come back to you.
You know,
Very serious.
I think a lot of states are kind of similar, but I don't know on the state of Missouri, which is where I'm at, if we have a one and done in your case in the state of New York. But that's interesting. So let me ask you a question, Stephen. Just curious, how many, when you're doing New York State offers, how many of them are just income tax only, personal income tax only versus sales tax and corporate taxes?
I'd say the clients that come to me, I'd say 10% are income tax only. Most of the clients come to me have the trust funds from a business that they own.
So the majority of them are businesses.
Yeah. So it's resulting from a failed business in the past. Mostly restaurants or bodega. I've been doing a lot of those. Same issue. I mean, I've been doing tons of settlements on those, great settlements. But I always tell the client, and I have this in all my disclosures to them, saying, we're resolving your agreement. You're settling $1 million for X amount. Before you sign off on this, you're going to make sure you're going to pay this X amount. Otherwise, don't sign off on this agreement. No, let's retract it and then live to fight another day.
Sure makes sense. That's interesting though. It's great information.
One thing to I think this also drives home is how the states are much more difficult to work with than the IRS is. And the IRS has very specific rules and procedures to follow. The states are kind of up in the air and all over the place.
I agree, because even here, the state of Missouri only has a 3-year payment plan. 3 years. That's the maximum.
Most states are going to go more than that. Yeah.
And it's really hard when taxpayers owe lots of money to get that extended outward to say, hey, I can't afford to pay it. And like you said, Stephen, we have hardship, forms here as well. But I'm sure each state has their own legalities of how we move through this.
Yeah, and generally I try not to do anything outside of New York. Occasionally I get clients that'll present to me other states. Like I was doing with a foreign client that owned restaurants in New York City and Philadelphia. And I was doing workouts both with their landlord to settle their exposure and then with the taxing authorities. And I told them I'm familiar with the New York State Offer Program, and that is easy. But in terms of the state of Pennsylvania and the city of Philadelphia, I had to look into that and engage people there. I found out they do have a program. I'm still working my way through it right now. But I try, and unless it's an existing client that's actually that I'm familiar with the finances, I would not take on a state that's not in my expertise.
But I think that the whole bigger picture of this is that whatever state you're in, to understand that each state has their own specific nuances of how they will do offers, or how they do installment agreements, or whatever their what they're offering you to be able to pay off your debt is. And it's very important for all taxpayers to understand that we as professionals have to look into each and every one of these, because we don't always specialize in every single state.
Right, which is why, unless it's a special circumstance like the one I told you about, that had a client with multiple locations that I was already engaged with, I won't even entertain another state.
I understand that completely.
I'll refer it out to my network. So let's conclude with something that's pretty exciting. I've been told that that Felecia and Patrick, you're working on a book that's going to be released soon. Why don't you go into that a little bit more?
Sure. The book is we're very very proud of it. It's been about a year in the making, and it's called "Drop the P: How to Go from Tax Prep to Tax Rep." And the idea is people who want to transition from a traditional tax preparation firm and kind of get away from the regular tax season of doing just the transactional client interactions of preparing tax returns to the more in-depth, challenging area of tax representation. And the book is kind of a roadmap on how to do that. We kind of go through all different aspects, why go into tax representation, and then we have different chapters on different tools to use in order to get tax representation. The book will be available in the next week or two, but we're very, very excited. As a quick funny story, last year at Summit, Felicia and I were having lunch, and we're sitting in the lunchroom, and she had just finished her first book, and she said, I'll never write another book again. And so I jokingly say, well, we should write a book together. And she's like, okay, what would we write it on? I said, well, we could write it on how to do a tax resolution firm. And then I thought, we'll drop the P, how to go from tax prep to tax rep, and I literally meant it as a joke. And a year later, the book is in existence, so we're going to get that published. So we're very excited about it. Felicia, is there anything you want to add?
You're absolutely right. I'll never forget the day you asked me that night. And then when I did say yes, I was like, what did I just agree to?
Right.
But I think you're right. It's been it evolved very quickly after the first of the year, and we just kind of ran with it. And we've been very blessed to have a lot of input from a lot of different companies, not just ours, but Tax Cures is in there for them as a marketing piece. Some of the software vendors that we utilize and really horn in on, Ignition and Alicio and Gruntworks, all of these different pieces of the software that really help manage your office. And again, as Patrick mentioned, it's a roadmap on how to move in that direction. You may not be able to do it all at once, but it does give you the tips and tricks and the tools on how to how to drop that P in your practice. Patrick did it last year when he stood up his new firm. I did it this year in June. So it's really a beautiful concept to be able to see that two people that actually did this wrote the book and knows what we're going through.
And the other great part about it is we're going to create a master class training to do it, and then next year we're bringing back the Midwest Tax Representation Conference, but it's going to be based on the book, and it's going to be a one-day conference that you would attend to learn the roadmap to transition to tax representation. So we're going to expand it more than just the book. We're going to provide trainings to people to help them learn the tricks of the trade, and that it doesn't have to be a hard stop changeover. It can be slow. You can first add tax resolution to your practice. I know, Stephen, you said that you do tax resolution now. I'm sure it took time for you to transition over to where you are now. You didn't just one day stop and switch over. And the book kind of really gives them the motivation and the background and the belief that they can do that.
No, that's actually great and great tools. I use some of that. I use some of the tools that you mentioned. I don't use all of them because I don't do any tax prep. Tax Cure, by the way, I wanted to shout out to them. Those guys are amazing.
Yes.
I couldn't be where I am today without them. But I've been using through my career, I've always been, in my opinion, on a state-of-the-art technology. I probably had one of the first websites out there 25 years ago, and and had my page up on Google and Yahoo for number 1 and 2 for bankruptcy and tax. 7-8 years ago, I transitioned outside of bankruptcy, closed down my firm, got all my employees jobs in the corporate world, and went corporate myself for a client. And 2, I remade myself during COVID strictly doing tax resolution as opposed to any other sort of business. And I used all of this technology that you mentioned. Not every product that you use. I tried some of them, and some of them work better. But I agree. I mean, So your book audience would be mostly accountants and what agents that just prepare returns, and they come up close with clients that say, "Hey, I owe the government," and instead of referring it out to us, they could actually take that business themselves.
Sure, sure. And
We talk about TRN as being, our networking concepts. And so there's a lot in the book. It's not just say, hey, pick up the book and start a tax rep practice. It's really, as you said, not every tool is going to fit every practice. And that's something we
Right.
don't push that. We just say, here's what we use and here's what we recommend, but that doesn't mean that one size fits all.
No, and I agree. And I've tried a lot of the tools that you mentioned. As I mentioned, like TaxCure is amazing. Of course, I learned all these tools from Tax Rep Network, TRM.
And actually, Eric did our forward. Eric did our forward for our book, so he was very.
yes.
We were blessed to have Eric to do that.
And don't forget, we also have a whole section on marketing as well.
Mhm.
TaxCure, their chapters in the marketing section. I do a lot of work with family law attorneys because you can get a lot of referral business for family law attorneys. I do a lot of work with taxes and divorce, and we talk about networking and building relationships with groups like that to grow your practice and get more clients as well. So the book also has a whole marketing aspect to it, how to market. We talk about how to price the different pricing strategies. So we try to hit all the points so people can kind of come away with the book going, okay, here's the blueprint, and then they can take it and run with it.
Exactly.
I know you're going to have a captive audience. It sounds like a great book. Looking forward to seeing it.
But we're looking forward for it to be in print.
Absolutely.
Hopefully by the first of the month.
Yep. Yep. Hopefully by the first of the month. And again, a year, what started out as literally a joke has now turned into the actual book, and we're very proud of it. So.
Oh, so exciting. Any other topics you'd like to add for today?
I think I'm good for today.
Same here.
Okay, I'm going to stop the recording right now. Actually, hold on. We can still talk, I believe.